Thank you for joining. These are a bunch of questions that I've received from my colleagues at the PTYA. The first question: when did your interest in investing start? I would say my interest in investing has been since I can remember. I didn't do very well and I didn't know very much. And to be honest with you, in the early years, I was much more academic in my approach to investing, probably as I went through my business education. But over the years, I found that I became far more flexible and far more open to other ideas and non-academic sort of thinking. So to answer that question, I've been in it for a number of years, and something worth mentioning is that I find that interest has ebbed and flowed. In investing, that tends to happen, especially when you're losing money and you tend to then lose interest. However, over the last 10 to 15 years, I would say I've become the most passionate, and it's probably related to the bull market that we're in. What is the best company that you have invested in? I would say that the best investment I've made has been in Google, or actually in Alphabet, the holding company. I've been in and out of Google probably over this 10-year period, and each time I sell and then come back in a few months and buy. And maybe I would have made more money if I would have just held for 10 years, but I always have tended to get a little nervous on the markets and then sell and then come back in. Typically when I come back in, I'll do a valuation and establish that they've still got some upside. In fact, I've just completed a Alphabet valuation, and I'm seeing once again that I think there is some value, and for some reason that stock tends to be undervalued more often than not. What is the most intense investment? I would say for a period I was dabbling in options and futures trading, and that is probably the most intense investments I've made. They're much shorter term, and you've got to really keep a close watch and a close eye on them. It's probably the reason why over the last decade I've switched much more to a value approach where you can literally buy and forget. So I just found that intense investing where you couldn't get to sleep at night is probably not worthwhile, and it's far more beneficial to find a valued stock, buy low, and then in fact what I tend to do is put in a sell order the moment I buy for whatever profit I think is viable, and I just wait and let it see itself out. And I find that a more fun and pleasant way for my personality to get involved in investments. What is the biggest loss you've made? I won't mention the total amount, but on a share basis, I would say the biggest loss before I got out was somewhere in the order of 20 to 30%. If you're watching closely and you're not ignoring the market, you can tend to see a loss coming. It doesn't honestly come that quick. Maybe it's, again, a symptom of the marketplace we're in, but generally speaking, if I see something declining beyond 10, 15, 20%, I will then make an assessment and pull the trigger, and sometimes sell 50% of that holding. What are some quick tips for investing? I would say the biggest tip I've got is experimenting. And previously this wasn't possible. You needed to go out and buy shares in lots of 100. You still do when, for example, you're buying overseas equities. For example, I'm looking at buying a bunch of Japanese holdings, and you need to buy 100 at a time. But in the US market, and I think some European markets, you can literally buy one share through RobinHood app. And I think this is the best way to learn investing. and the best way to experience it. And you just go out and you buy one share for $30, $40, and you get some experience in buying and selling, watching trends, reading the news around it. I think that's probably the tip that I would give my grandchildren at this point for investing. The second tip is I wouldn't focus too much on the news and sort of knee-jerk reaction. Obviously, the news that is sort of longer term, you need to filter out. And that, to me, is the favorite part of investing, is the ability to take a whole lot of information coming out of news reports and discern which is worth reacting to. Obviously, you can react to every piece of news, but it's really tying those news events to your investing portfolio and understanding what's worth paying attention to. What are the lessons learned from the Gamestop episode? Well, for me, it was very much the sort of wisdom of crowds, if you will. It's amazing how crowds congregating can now move a stock price. The lesson from this probably relates to cryptocurrency in a way, where you see the price. In a sense, you have a feeling that the price is potentially being manipulated. You'll see how Bitcoin moves up, drops, moves up, drops, and it's on a steadily incline. But there are definitely cycles where you can make a profit. And you do begin to wonder how much of the marketplace can be manipulated. Certainly, that was the lesson from GameStop. I don't necessarily take away any negative stuff about RobinHood. I think they were more victims to what was going on, which was exposing the short sellers. Maybe that's another lesson which I have always taken into account, is I don't like shorting a stock. I find it sort of counterintuitive. I prefer to find stocks or companies that have value and buy the equities and wait for the value and the price to come together. How should beginners get started? Well, I suggest the best way today is actually to get an account like RobinHood. And don't get involved in any of the margin plays. That means lending RobinHood's money to buy stock. Just deposit a small amount of funds in there. And if you can buy and sell one stock at a time, I think that becomes a very interesting play. As you sort of get started, don't knee-jerk. Don't buy today, sell tomorrow. Rather look for stocks that, in my opinion, you can buy, and then over the next quarter, there's potential opportunity to move. I think there's a strong school of thought that says you could look even at longer terms. Here in the US, it pays you to hold stocks for longer than a year, because then you have capital gains tax, which is less taxes. So if you're in the trading business, you do get taxed at a higher rate here in the US, and I think in many other countries. But the best way to get started is a small account where you can buy or sell one stock, and you can start figuring out how news events, how the release of financial information impacts that stock price. What will Tesla be valued out at in 2021? That's I wish I knew. I've done valuations of Tesla, and I cannot see the value that it's getting at the moment. No matter what I do in my spreadsheets, it's really difficult to come out of that valuation. I think it assumes that Tesla are going to dominate the EV marketplace, and I just can't see that as being true. I think there are other players, and it's going to be very similar to the current auto market, where market share is just shared across. So I'm not quite sure what Tesla's true value is. I certainly don't see it where it is, and I'm tending to move away from Tesla. One of the biggest errors that people make when they value it and they say that it can dominate so much of the marketplace is they don't factor in the investment that Tesla will need in manufacturing capacity. And when you look at their spreadsheets and their valuations, you find that that piece is often missing from their valuations. Is it too late to start investing? The answer to that is no. Yes, we may be at the top of a bull market, but I think whenever you have markets, even if they're declining, there are opportunities and interesting opportunities to be found. Now that the US market is maybe a little saturated, I've been tending to look overseas at some of the developed countries, and one in particular is Japan. I've made another video about why I think it's worth looking at investing in Japan. China used to be an interesting play. I'm a little bit nervous because of the government intervention there, but I think there are lots of opportunities, even in some of the other emerging countries. For example, Chile, Brazil may have some opportunities. South Korea may be interesting to look at. Even in the United States, there are many. There's some interesting IPOs about to happen. Coinbase in particular appears to be very interesting, although IPOs are really are difficult to get involved in. But it's never too late to start investing. And if you've got a bunch of money sitting, earning a very low interest in cash, you've got to start looking at what you can do better with that money. What's the best age to invest? I would say I would encourage you to begin to learn and teach your children how to invest from an age of 10 upwards, and give them the tools so that they begin to understand how this works as young as possible. How much money do you need to start? You really don't need more than $100 to start. Certainly here in the US on a RobinHood account, you can feed the account with $100 and you can go off and buy some stocks. I would really recommend that you don't get involved in buying those low value stocks, penny stocks as they call them, or anything under $10, $20. I think somewhere in the $30 to $60 is a good sweet spot. If you can invest more, let's say $500, I would look at higher end stocks like Apple or Adobe and those types. Obviously, you can't look at Google or Alphabet and Amazon as they're in the $2,000 mark. Should you use RobinHood? I'm perfectly comfortable using RobinHood. I have two brokerage accounts. One, a more sophisticated account, which allows me to invest internationally, and then RobinHood, which I find fantastic to use. I'm a gold member, and I find it very easy, very simple, very quick, and I have no issues with it. It looks like they're going public soon. I think they were stretched financially because of the way that the marketplace works in the stock market, and I think that Congress is looking at that very carefully, but I don't think they're overexposed. And remember, when you buy stocks through RobinHood, once you own that stock, you legitimately own that stock, and RobinHood have no part to play in it. So I think they're a legitimate player, and I think they've made the marketplace really interesting, and they've made it very democratic in terms of lots of people can get involved instead of the big institutions. What apps do you use? Frankly, RobinHood is my go-to app for just about everything. Then I'll tend to use or subscribe to a few newspapers that I've moved in and out of. I do like ft.com and I do like Wall Street Journal, but none of those two offer me much in terms of investing. The one that I really favor for investing ideas is Barron, which is part of the Wall Street Journal, and I find that a worthwhile journal to read. So I really just have those two apps at my fingertips most of the time. And then there are some more sophisticated investor apps that will allow you to do screenings and that type of things. But frankly, you can get most of those for free right now. What protections do you need when investing? I think it's better to play with your own money, especially when you're learning, rather than what's called a margin account, where you're loaning money essentially from the brokerage. And you need to keep a close eye on your investments and understand that you can lose that money. So, for example, what you need to understand is that when a company goes bankrupt, the equity investors, that's the people who own the shares, can lose every cent of their investment. Now, obviously, it'll decline over time, but I think the only protection I could recommend is knowing when to get out and cut your losses. Many people don't know how to do that, are not prepared to take a loss, and on occasion, and it happens very seldom, it'll go down to zero. I've had one or two cases where a stock I've invested to, and I've had a very small investment in it, has actually gone down all the way to bankruptcy and then was purchased, and it's now worth, it's a penny stock worth a couple of pennies. So your protections is really against yourself, is my recommendation. It's against human greed, putting too much money into an idea that you have a hunch on. You've really got to do your research. So, your amount of research is directly proportional to the size of investment that you will make. Question on risky versus safe havens. So, for me, the risky side is cryptocurrencies. Safe havens for me tend to be stocks, and then obviously the safest place to invest is in government bonds. So government bonds are much more difficult to get involved in, but with ETFs you can now invest in a portfolio of government bonds. And then cryptocurrencies is obviously an interesting idea. I do invest in cryptocurrencies, but a small percentage of my investment. I try and keep it in the 10 to 15% range, because I do think a cryptocurrency may be a hedge against sort of world disaster. And for what it's worth, I'm not quite sure what you would do with that cryptocurrency in the event of a world disaster, but it is something interesting to look at, and so that's one way to look at risk versus safe havens. Okay, well, those are the questions covered. Thank you for sending them through to me, and I hope you enjoyed the answers and would love to hear your perspectives in the comments below. Thank you very much.